Hi, and welcome to the Stock Scores Market Minutes for May 7th, 2018. All right, this week I want to talk about one of the most basic things in finance, and that is the power of compounding. When you reinvest your trading profits, you grow your account exponentially. Make 10% a year on a $100,000 account, and as long as you're reinvesting that capital, your money will double in about 7 years. If, however, you took out your profits every year, well, then in 7 years, you're still going to have $100,000, which is going to be worth a little less because of inflation. If you take out half the profit every year, let's say you need to pay some bills along the way, well, now it's going to take 14 years to double that account. So we should not underestimate the power of compounding. Here is a chart showing how that $100,000 account grows at 10% a year. In 20 years, it's worth over $700,000. If we have 20% growth, look at how that curve gets steeper and steeper. And now, just by doubling the performance of the account, and not to say that making 20% is easy for most people, but there you see it, it's starting to push over $5 million in that same time frame. The point of this is that when you have return in a portfolio that you reinvest, the more that you can reinvest, the better your long-term performance will be. All right, let's get into this week's market analysis. Here is the chart of the S&P 500, 30-day, 60 minutes. We've had lots of chop lately. By chop, I mean down, up, lots of movement. Here we had trend. That's a lot easier to make money than when you have this choppiness. We had a pretty good performance to end the week, and it brought prices back up to the downward trend line where they got stuck, which we would expect. And now the question is, are we finally going to break up out of this trading pattern, or are we going to fall back into it on Monday? We are in a downward sloping channel, so the probable thing that will happen is that we will fall back into it. But I have to say the buying was pretty impressive on Friday, and it could be that the buyers are finally motivated again after really not being motivated since the third week of January. And let's take a look at that chart. This is the 3-year weekly chart. You can see the highs, third week of January, and I can draw a downward trend line, something like that. And you can see that we're still below that, but our volatility is compressing as we get less and less volatility. And in fact, the last few weeks we've had very narrow ranges for the week, although we've had lots of fluctuations around that. You can see we've closed very near where we opened for the week. And that shows that the buyers are gaining some confidence that the price is right for the market. And now the question is, do we break upside through resistance, or are we going to go back and retest that long-term upward trend line? Well, as we get closer to the tip of this pattern, I've drawn the line across the bottoms and the line across the tops. As that gets narrower, as we get into the pointy tip of it, eventually we're going to have to make a break one way or the other. And that's what you want to watch for near term. All right, let's look at the Russell 2000, which has been in a sideways trading range for most of the year as well. Had a pretty good move on Friday, but don't get too excited about it because it is still below resistance, still above support. This is called a pennant pattern. And the volatility is diminishing as you get into the tip of the pennant. Are we going to break to the upside? Maybe. Could we break to the downside? Also a solid maybe. We don't know yet, so don't make your move aggressively until you get a break out of this pattern. On to the Canadian stock market, which has performed quite a bit better than the US market in the last month, and that is because oil has been rallying, and of course there is a strong contingent of oil stocks on the Canadian market, not to mention the effects that a stronger oil market has on investment banking and the general economy in Canada. All of those things are really important to this chart, and that's why the TSX has been moving higher over the last few weeks. But when you look at that longer term picture for the TSX, you can see that we're still stuck under resistance, we're still above support, and we're really just oscillating inside this range. Yes, we could rally up to the highs, get stuck and fall back. Wouldn't be anything too exciting. So it's really a trader's market right now where you have to go to the areas where there is some strength, specific sectors where there is some strength, because the strength is not widespread in the Canadian market just yet, and that shows up in that longer term chart. On to the TSX Venture, which is the small cap stocks, micro cap stocks in Canada. And this big run here was mostly the cannabis names. That story has fallen off, and so this market has gotten quiet again. It's essentially back to where it was before the hype about the cannabis legalization in Canada really took effect on that market. And it's kind of sleepy now. There's obviously going to be the odd stock that does well, but when I do my market scans every day, I really don't see a whole lot on the Canadian market on the microcap side. Now, looking at the Treasury Bond chart, this is important because it tells us where interest rates are going, and we have bounced off of support and held. That doesn't mean we will continue to hold. The worry I have is that there is pessimism building here. You can see that because of the fallen tops. Don't get too worried about interest rates until we get a breakdown through that floor price. A breakdown through that floor price would indicate that interest rates are going to start to move higher. They've moved higher a little bit already, of course, but not dramatically so. And so I would say there's some bearishness in that market, but it's still not in a trend where you have to be too worried about it. US dollar, well, this is an important chart as we talked about last week, because the US dollar broke its downward trend line. That was last week, and it got some follow through to the upside this week. Now I expect it will get stuck at that little peak right there, so we could have one more strong week before we see the US dollar stall a little bit. We haven't built a rising bottom yet. This is still early stage turnaround for the US dollar, but it is encouraging if you are a US dollar bull, because the downward trend line has been broken, which is step one. Step two, we consolidate. That means we go sideways, build a rising bottom, and then step three, break higher from the rising bottom. Those are the three stages of a downward trend line reversal. And on to gold, which suffers when the US dollar strengthens, and you can see that it has suffered the last couple of weeks. We're still in the optimistic pattern because the bottoms are still rising, but we're also still below resistance that we have been below for a long time. And so to me, not really an exciting market. Yes, if a gold company discovers a new deposit of gold, it will probably be able to go up. But are gold stocks in general going to go up? Not unless we can get a good solid breakout through that resistance level. Different story here on oil, because it broke through resistance some time ago, and I've been bullish on oil for a while, and I continue to be that way because the trend is up. We're in an upward sloping channel, and the next level of resistance really isn't until about that price there. This, of course, is the US oil fund. I use that as a representation of the oil market. And it looks to me like will continue to rise, and that should continue to benefit markets like the Canadian market or the oil sector in the US market. Finally, fear. We had little spikes of fear a number of times, and they always quiet down. We're quieting again. Big picture, though, we're still elevated, even though this is at the low of the chart for the last 30 days. When you look back over the last 3 months, the fear index is still fairly elevated, and that shows that investors are still somewhat concerned about where the markets are going. So this deserves some attention still, but certainly it's not a big worry unless we break this downward trend line, which has got some work to do that. So my ratings then remain neutral on US stocks, long and short term. I've raised my short-term rating on the Canadian market to bullish, but still long-term neutral as we are in that sideways range. Gold, I've dropped my short-term rating to bearish. We've had some selling pressure the last little while, and that's showing up in that short-term chart. Oil, bullish on both time frames. The US stocks rallied higher to end the week last week, and they're now threatening to break that downward trend line that started in January. We want to watch for a breakout of that line this coming week, but unless it breaks out, I wouldn't get too aggressive on the buy side. The Canadian markets are strong on that oil strength, which continues to trend higher. Gold is being dragged down by the strengthening US dollar, which hasn't really had an effect on oil. And as I said, fear is still elevated, but it is falling. So I'll show you a quick trade that I did on Friday, this of Apple. Bought it on my worm strategy at the open. You can see there the pink dot. That tells me that there is an action candle on that stock. There was lots of action candles Friday morning, so I bought a basket of stocks, this being one of them, and it continued nicely higher through the day. Now, not everyone wants to buy a $183 stock. I get that. It's more capital intensive to do so. But we should not forget that stocks like Apple have very liquid traded options on them. And so you can leverage your position through the options market. I'm not a big fan of options with less liquid ones because the spread between the bid and the ask can be wide and you suffer a lot of value loss because of that spread. But on something like Apple, Intel, Microsoft, the big name companies that we're all aware of, if you get a buy signal as a day trade, as a swing trade, whatever, on one of these really highly liquid stocks, don't discount them just because they're expensive. You could consider trading them in the options market. Just make sure you understand how options are priced. It's not something that you should treat lightly. You need to gain some knowledge before you do that. Well, that has been the Stock Scores Market Minutes for May 7th, 2018. Hope you've enjoyed the video. If so, click on that like button, hit the subscribe button, and most importantly, trade well.